the desired quantity, as during the IPO, the investors don't get the desired quantity of shares due to oversubscription of the shares. We know that, due to the funding facility which is being available, or the liquidity facility which the HNIs have, due to that, the subscription amount of the IPOs, good IPOs, uh, don't allow the rational investors to get the desired quantity of the same shares. So while in the unlisted market, he can get the desired quantity at the desired price, subject to the availability of the same. Thirdly, there could be lower volatility as the codes of the same doesn't change much. As we know that these are not quoted markets, so I mean day-to-day prices might not be available for trading purpose. Hence, the day-to-day volatility can be absorbed since the prices are not quoted. And the same gets linked more towards the demand supply as well as the fundamentals of the company. As we know that, since these are I mean, even though these are unlisted, but still these are equity shares only, and that the risks of all the equity related investments apply here as well. Other than that, other risks which specifically apply to unlisted space includes low liquidity. So there will be no freeness to entry and exit. Hence, because there is no dedicated buyer or a seller for the same. Counterparty risk. Since the trade happens outside the purview of the stock exchange, hence it's always advisable to deal with a recognized dealer and always involve a financial advisor while dealing, because there could be some counterparty risk, or there could be some mismatch with, if they I mean two for example, if there are two companies with similar names, so until unless there is an expert involved over here, a differentiation between the same would be very tough for a new investor. Inadequate information for evaluation. Since the unlisted companies, unlike the listed companies, don't have stringent disclosure norms. The way stock exchanges always gather all the companies which are listed on the stock exchange need to report substantial development into the company along with their quarterly filings, but that is not mandatory for the unlisted companies. So for them, for a rational investor to get the proper data on a timely basis would be very tough from the unlisted companies until the company directly communicates to its investors. Unfavorable tax implications. Since these, while dealing with unlisted companies, since the STT is not involved over exchange platform, hence if these shares are being sold in the market 24 months before the investing, then unlisted shares attract short-term capital gains tax. However, if sold after 24 months, the long-term capital gains are taxed at 20% with indexation benefits. Lock-in shares. Some shares might come with a lock-in clause and hence needs to be checked. Also, investors are eligible to sell their holdings only after 6 months from the date of listing of such shares. So these two kinds of locked-in always needs to be adhered while investing into the unlisted shares. Ways to invest. It would be difficult for ordinary retail investor to do the due diligence before investing in the unlisted space. Therefore, please take professional assistance. Also, a better option would be to invest in this segment through alternate investment funds, which invests in venture capital, private equity, real estate, and hedge funds. AIFs have competent professionals who can do due diligence and assess the prospects of their potential investment. However, the minimum ticket size is 1 crore or more, hence might not be suitable for retail investors and would be suitable only for HNI investors. Here, in the AIFs, there is a dedicated fund manager along with his team who shortlists the funds which could be beneficial or which could match the objective of that particular AIF. Basis that only he strikes the deal along with the all the due diligence part which needs to be done before investments. So for sophisticated investors, AIFs are already there into the market. However, for investors who wants to invest with a lower or to start with a lower ticket size, can opt for these direct equity exposures. So past performance, some of the companies which have done quite well or have traded in the past. However, these codes are not relevant. At least the unlisted market price might be differing. So these are just a source-based data. However, the NSE listing price could be relevant. because these data are being provided by the stock exchange itself. So some of the good performance which has been seen in the past by the some unlisted shares includes Anand Rathi Wealth, which has created a good numbers even recent times. So they have given a listing gain of 33%. Sapphire Foods, FSN e-commerce is the owner of Nika brand, the fashion brand Nika, and Nazara Technologies, which is into the gaming. So all these companies, but that doesn't necessarily mean that all the listed unlisted shares is going to report the same gains. These are only for uh, recommend. I mean, not as a recommendation, but only for to give a glimpse of what has happened in the past and may not be repetitive of the future. Now, in the market, there are very much a lot of investors get attracted because of the recent deals in last 2 years what Reliance Industries have done, but none of them has happened via directly the listed company Reliance Industries, but via its group companies either Reliance Retail or Reliance Jio. So some of the shares which are very much popular in the unlisted markets includes Reliance Retail, which is the retail arm of Reliance Industries. NSE Limited, the largest stock exchange or the sole stock exchange for derivatives volumes in India. HDB Financial Services is the NBFC arm of HDFC Limited. Kurlon, which is into the manufacturing of mattresses. Tata Technologies, another subsidiary of Tata Group. Carrier, which is the manufacturer of air conditioner. Studs, manufacturer of helmet. Well-known Chennai Super Kings, which is the, I mean, who played in IPL and has won very much, I mean, lot of IPL matches as well, finals. So Chennai Super Kings, owned by Radhakishan Damani and India Cements. So Radhakishan Damani has got a good exposure in India Cements, and India Cements was the initial owner or the sponsor of Chennai Super Kings shares. Lastly, HDFC Securities. There are other than this, there are more than 150 to 200 more unlisted companies which trades from time to time. However, though we have just shared just the popular ones, also these are not the recommendations. Every investor should watch out for the price at which he is getting these shares and what do his own due diligence before investing into any of these things. So what we offer the interested investors the suitable and convenient way to take exposure in these space, both in direct dealing as well as investing. Via EIF route basis, the objective and other profile of the clients. Hence, interested clients can connect with us. So there are, as we discussed, there are two ways the clients can directly buy from us or via the AIFs. So we deal in both the AIFs, which deals in the unlisted space, but AIFs comes with the lock-in. So other than the lock-in which we just discussed of 6 months after the listing, AIFs comes with a lock-in of 3 to 6 years, depending upon the objective of that particular AIF. A small step, it could differ from case to case. A small step to buy unlisted share, the client must have a demat account registered with any of the SEBI registered broker, and then he should shortlist the company he wants to buy or sell along with the desired price, and then check the availability of the same with us or with the registered brokers. Once confirmed the share, then he used to, every broker has a different format to do the later part, but most of them have the process like to share the intent of buy or sell the shares with the transaction amount along with the fees. Rest of the process is broker specific or the dealing entity specific which we are dealing with. So this is just a, but main thing over here is to watch out for is the demat account. Demat account is mandatory. Thank you. Any questions you can please let me know. Attendees are requested to post their questions now. I'm happy to answer the same. Yeah. So minimum investment criteria, yes. Ticket size varies because most of the dealers deals in a particular lot size, like 5 lakh amount or a 10 lakh amount. So it depends, and sometimes the shares also carries the minimum ticket size. But yes, particularly it depends upon the share to share that what could be the minimum investment amount which needs to be done to get the deal off. So next question is, yes, we don't recommend instantly to each and every investor which shares to needs to be buy or sell, but basis the profile of the investor and the desire of the investor, we can uh, finalize the companies which might be suitable for them. But we generally don't directly recommend that these are the stocks which one should must mandatorily invest into it. So okay, the question is there any minimum investment criteria? So I just mentioned that no, there is no minimum investment criteria, but investors should keep in mind at least 5 lakh rupees to 10 lakh rupees as a minimum investment amount to strike that most of the deals. But some deals could be available at a lower minimum investment amount as well. But on a conservative basis, one can keep in mind 5 to 10 lakhs as the minimum ticket size for the same. However, some shares come with a larger ticket size as well. So it depends upon the share to share which the investor wants to invest into it. So next, what is the recommendation from Dilzer Consultants on this? Do you recommend retail investors to invest in unlisted shares based on the risks involved? No, as I mentioned that every investor should needs to be, and I mean objective of the investor needs to be analyzed as per his risk profile, and then only we can recommend if at all he wants the any of the unlisted shares he wants to invest. What is the holding period for unlisted shares? It could be for long term, it could be short for short term basis the investor's requirement. However, once the share gets listed on the stock exchange, then the shares would remain locked in for at least 6 months from the date of listing. Before that, nobody can sell the shares in the market. No, lock-in period depends on broker to broker. No, lock-in period doesn't depends on the broker to broker. Lock-in period depends upon the class of shares which we are buying A, and then the mandatory 6 month lock-in of exchange, which is being provided by SEBI. After purchase of shares, where one can track the price, there are multiple ways through which you can get the price. The company also will start sharing the reports with, I mean, the annual filings with you. So, but the market price would be very tough to determine because, as I said, that these are very closely held by the market. So it depends. You can take the quotations from the us as well as from the different brokers which are there in the market. 6 months lock-in after get listed, right? Yes. Uh, the shares would remain lock-in for 6 months once the share gets listed on the exchange platform. Any more questions, please share here. Getting listing gains not possible. No, we cannot assure any kind of gains or losses into any of the investments. It depends upon the shares performance and the fundamentals of the company. But yes, I mean, if anyone wants to exit, he can't exit until 6 months is over from the date of listing. Bid ask spread. Bid ask spread, since this is a very closely held market, right? Not widely available, and there are not much participants into it. So there could be a bid ask spread which could be undefined. Like it could be a wider spread, it could be a narrow spread as well, depending upon the quality of the shares and the demand supply situation. So it's a market phenomena. I can't comment on the same, that how much would be the bid ask spread. I presume there are no more questions. You can share any other questions over mail. Uh, Thanks you all.